Did you know that 3 in 4 buyers actually regretted buying their homes over the past 2 years? I'm going to show you all of the data that is flashing some major signals for real estate. Let's begin by taking a look at the data itself. 3 in 4 buyers have regrets about their home purchases, and you could look at the chart down below. The first one is I spent too much, 30%. I bought too quickly, 26%. My home requires too much maintenance, 25%. And it goes on. And essentially, what they're saying here is that over the past couple years, people paid way too much money for their home. They got into a mess. They were simply all caught up in the hype, and now they have found themselves with way too much to handle, both in terms of their finances as well as physically. They can't keep up. And so we are seeing this now, but we knew this a couple years ago. We knew that whenever you have hype and mania and euphoria, it ends badly. And that goes for any asset class. You see, with real estate, it's much more stable generally than you would find with many other risk assets. It doesn't go up and down like crazy, but in 2020, some places were going up 50% year over year. That is very unusual historically. It is an anomaly, and we do see retracement as a result. Right now, today, we are looking at the prices where you would normally have those, or at least over the past couple of years, you'd have those multiple offers. People are rushing, they're hitting each other in the head to go get that house. And now, today, prices are actually going below the asking price. So that is something that I believe would be very interesting to keep an eye on. You could do that through Zillow, you could do that through your other websites that you love to check out, and you can set an actual reminder to let you know, because you can check those homes that are selling around your area, and you put a reminder on one of these websites and it will notify you when it sells. You could keep an eye on it. Housing starts and permits, looking at both of these declining over the past few months. So this is a very good indicator. I look at this, and I talked about this in my first book, because that's one of the several indicators I gave to people to keep an eye on what's happening in the real estate market. This is very good, just showing us that it is declining now, which is absolutely something to be expected when there is rising interest rates. If costs go up, consumers just don't have the cash to put out there. 6% of listings had price drops. This just showing us the red line being 2022 at a level we basically haven't seen before. What happens, over the next few months will remain to be seen. But as long as interest rates are up, we are going to have people that are dropping their prices or they're delisting them and so on. U.S. housing affordability has reached the lowest level on record since 1996. Going back, I mean, this is unbelievable, truly, to think about this, because you can measure it in dollar value. That's one aspect. But when you actually see what people are making versus what the housing costs, that's a ratio that has to stay relatively normal, and it's not. It's anything but that. Home purchases are getting canceled at the highest rate since 2020. Looking to surpass that right now, but essentially just showing you that people are just bailing out of this. They don't want any part of it. A lot of times, they're leaving their deposits on the table. They don't even care because the price of the homes have come down. So that's just the way it goes. And what's the whole situation here? It's this: out of real investment advice, consumers failing to make ends meet. Where everything was also fine when interest rates were very low, now things have changed. And we could see that today. This is basically just showing us the gap between the real DPI, being your disposable income, and the cost of living. And that has continued to decline over the years, really accelerating around the year 2000 or so. And we have to talk about, all the aspects here. It's not just data on a graph. It's not just a couple numbers. We need to look at the depths of this all, and I'm going to show you right here. Despite plunging lumber, the cost of building a home remains stubbornly high. The cost of building a home has not fallen much, even though raw lumber is down 65% from the peak. You could look at that on the chart just showing the price of inputs to residential construction basically flatlined at this point over the past several months. It's just unbelievable because everything, seemingly everything, has gone up. While things may have come down from their peak, they are still way up, and it's putting a lot of pressure on the consumer. And that leads me to this, because there's only one resolution to higher prices, to spiraling out of control inflation, and that is increasing interest rates, reducing the balance sheet, and trying to get spending under control. Well, this article out of Bloomberg mentioned something that I think, if you don't know about this, I mean, you got to pick up a history book. History is going to teach you everything you need to know. In the 1970s, Fed Chair Arthur Burns allowed inflation to run too high for too long, something I talk about frequently here. This is leading to a classic case of stagflation. In 1979, the year after he stepped down, he gave a speech in Belgrade, quote, "the anguish of central banking," and that claimed that the society was unwilling to accept the pain necessary to stifle inflation, making it impossible for the Fed to do its job. That was back then in the 70s. And what do we see today? We can't face the music. We can't rip the band-aid off. We can't deal with the problems. So we have worse ones each and every time. I hope you get what I say here, because I basically have said the same exact thing for the past couple of years. And in fact, since I wrote my books, you know, it's so obvious, but some people, they just can't get it. They just, no, my 401k, I can't deal with that. But a little bit of pain up front would mean a lot better situation down the road. And then this is talking about Canada. It's the same thing. Canada, US, UK, Australia, New Zealand. Look around. It's all the same. Talking about interest rates. The expectation here is that interest rates will need to rise throughout this year. They want to get, inflation rates down to 2%. It's the same situation in Canada, okay? Quote, "By acting forcefully in raising interest rates now, we are trying to avoid the need for higher interest rates and a sharper slowing down the road." You see, they don't want to have to do this half level thing that they did in the 70s. They want to hit it hard and then get inflation to come down, but do it gracefully in that so-called soft landing, okay? So this is coming directly from the Bank of Canada, and I just think it's important to see that, to understand it, and then the historical context. Remember, when I'm showing you this here, it's not just charts, it's not just articles, it's tying it all together so that you can be aware of this all, okay? Look at China, situation going on. This is really going to have an impact, and you could see it. China shuts factories, rations electricity as heat wave stifles the economy. Again, this is going to bring down all the numbers, all the figures for China. They're going to have to create this more stimulus. They're going to have to cut rates and so on. We'll see what happens. But without that engine of growth that is China, the world will slow. Chinese shun debt and pile up savings, threatening global growth engine. Households downbeat, but their prospects are retrenching with consequences for local giants as well as multinationals. There's a lot going on in China right now, so much, in fact. But this is just one aspect here, and they're just saying, I'm going to back up for a second here. I'm not going to get into these kind of things right now. I'll just save some cash, and then when prices come down, I'll invest it. That's what a lot of people are doing. And of course, that's deflation, you see? And that's kind of what the central banks want. They want deflation right now, in a sense, because they want the prices to fall. They want people to be a little bit apprehensive, but not a complete collapse. So it's that fine tuning that they're trying to do. Of course, surface level stuff. We can't get into the deeper levels here, as I've tried before, but it aggravates too many people. And that leads me to this last point that I want to make, because we've got situations that are largely out of control for so many people. This right here is one. Colorado River cuts expected for Arizona, Nevada, and Mexico. So places, not just these, but places everywhere are basically saying, okay, we're going to restrict water. We're going to restrict water to these farms. We're going to restrict water down here. If you don't have your situation in order, you're in big trouble. Okay, one way that people do it is they have a problem where they live, they move out. But that's something good. But what if they have problems where they move to? I mean, you've got to be self-sufficient, or at least as much as possible, wherever it is that you live. I mean, it's just a matter of fact. You've got to do whatever you can. This is the drought monitor for Texas, and you can see a lot of the areas are in, quote, exceptional drought. This is not good. It's going to increase food prices. It's going to create a problem for people of all sorts. This is never good when it's extended. There's always going to be dry patches. There's always going to be fundamental problems that happen. And, things happen here and there. But it seems to be pervasive in this area. We're getting it in Europe as well. We're seeing it all over the place. Okay. So be prepared. Do what you got to do. If you're in a place that's sunny all the time, maybe solar panels are the right thing for you to provide your energy. If you're in a place that's dealing with drought all the time, can you actually harvest your own water? This is something that people just overlook. Can you do a shallow well, at least, if not a full well? Whatever it is that you can do, make it happen. Don't always think, oh, I need to invest in the next Netflix or the next Dogecoin or whatever it is, when you can take a portion of that and invest in something that keeps you more self-sufficient than the rest. That would be, in my opinion, much more intelligent. Investments are not, the asset class of stocks and bonds. And now there's this thing called cryptocurrency. So maybe crypto. Maybe a precious metal. So I'll have 1% precious metals. Think outside the box, please. I mean, there's so many other things surrounding self-sufficiency that are an investment. It's truly an investment. I've seen so many comments from people before that have put their money into their self-sufficiency and are so happy. You don't hear people say, I am really upset about that garden I built in my backyard. I've never heard that before. Okay, anyway, I hope you appreciate that. If you did, you got to subscribe to the channel, all right? And I'll see you in the next one. Take care.